Hello guys, it's Candice here at Ask Candice. Many of you guys have been asking me what is the best policy to introduce to your clients. Should you introduce the IUL policy or a whole life policy? And my answer is going to depend on their situation. But before you give that information to them, let's make sure that you are prepared to present both options to them. So let's talk about these two powerful life insurance policies, how they both protect your family, but they'll also build wealth over a period of time. So first, let's start with whole life. A whole life is exactly what the name says. It's a whole life. You have it your entire life. Your premiums stay the same. The cash value grows at a guaranteed rate. And with some policies, you can even earn dividends. Think about it like a financial crock pot. Slow and steady with long-term value you can count on. Great for people who value security, guarantee, and you don't have any surprises. On the other hand, you're going to have the IUL, Index Universal Life. Everyone's talking about it. There's hype on the social media, on platforms about it. Now, let's look at an IUL. This type of policy also provides lifetime protection, but it gives cash growth that's tied to the S&P 500, also known as the Standard & Poor. You're not going to be investing into the stock market. Again, you're not going to be investing into the stock market. It's tied to the indexes, which mirrors, your returns are going to mirror the stock market. But it has a cap and it has a floor. So if the market goes up, you get the portion that it gains. But if the market goes down, you will never lose the value in that policy. Many of the policies that I offer, they have a floor protection of 0.25%. So even if the market is going haywire and your 401k is losing money, your IUL Index Universal Life policy will at least make you 0.25%. IULs, they're a little bit more flexible than your whole life policies. You can adjust the premiums and potentially your cash value faster than the whole life. There's a lot of moving parts when it comes down to the IULs, and the returns aren't guaranteed. So yes, it has that floor, but it also has that cap. A lot of the companies that I'm working with right now, they have a cap either at 8% or at 12%. So if the market is doing well, if your 401k is running at a 25%, but you have the option to lose money, the IUL is going to pay between 8 and 12%. So here is a quick side-by-side comparison of the whole life policy and the Index Universal Life policy. So the whole life policy is going to build, both policies build permanent lifetime protection. Fixed premiums are going to come with your whole life, the guaranteed growth, stable. The IULs, you have flexible premiums. Guaranteed growth. Also with the IUL, it's tied to the indexes and not to the growth, the dividends from the company that you're working with, i.e. if you have a Mutual of Omaha whole life policy, it'll be based on the dividends earned at Mutual of Omaha. Whole life is all about security. IUL is about flexibility and potential. So which one is going to be best for your client? If you have someone that wants lifetime coverage with rock solid guarantees, whole life might be a better choice. But if you have someone that has wants a little bit more control, more growth potential, and does not mind the complexity that comes with the IUL, then the IUL will be the best for them. Either way, the key is finding a plan that fits their needs and fits their financial situation. let's connect and customize a strategy that's going to be best for your family and your friends and your new clients. And you might as well get an IUL on yourself. Who's better to sell the product than yourself? Again, thank you so much for tuning in today at Ask Candice. Look back next week for another video on life insurance, health insurance, or just asking Candice anything that's out there. Thank you.